The stock market is the only sale in town where people do not line up for. Yes, that is right. SoFi is on an incredible sale right now, and that's why I've been loading the boat on SoFi. But welcome back to the channel, all of my beautiful people, ladies and gentlemen. We're going to give you guys the scoop on SoFi as far as the technicals are concerned. We're going to look at the option flow from the institutional investors, just how bullish this is. We're also going to go over the 13F filings because hedge funds and institutions are loading the boat with SoFi, and this is a huge sign for me personally. I love to see what big money is doing. If they are buying the stock more than they are selling the stock, to keep this very generic and straightforward, that is a good thing. But you're not seeing anybody selling the stock. You're seeing people only buying the stock. So we're going to talk about that, as well as I do want to go over the Super Bowl and some unfortunate news that is circulating around about SoFi, or an incident that happened outside SoFi Stadium that is very unfortunate, like I said, but I think it's bringing a lot of publicity nonetheless to SoFi. So let's dive into this video. If you guys find education or simply entertainment out of this video, hit that like button for me, subscribe to the channel, and comment down below how many shares of SoFi do you own? What is your price target? What do you think is going to happen with earnings? Let me know that situation. And first and foremost, I do want to start off with my thesis and my position, as well as my option trade for SoFi earnings. Keep in mind, I'm a long-term investor in SoFi. I have no plans on ever selling my shares unless SoFi goes to like $200. Sure, then I might sell some shares, but I'm not in the woods. I'm not in the camp of this is a 10, 20, 30, 50, 100% trade and I'm out. No, SoFi has a long ways to go, and it's disrupting the financial market. So I no plans on selling my shares. Obviously, down about 26% in general, down about $1,700, market value of $4,700. Portfolio diversity of 10.77%, 400 shares at $16.01 is my average cost. Now, my option trade for SoFi earnings are SoFi $12.50 calls for March 18th. That is the expiration. My average cost of $1.34, and I am up about $20 or about 5%. Now, I don't encourage people to do this. It's a lot easier and safer just to buy shares and hold them. This is for somebody that has high conviction and nonetheless are willing to lose this money if they are wrong. That is why I also did get a little bit of extra time after earnings. So hopefully, if I'm wrong, I shouldn't lose all too much money. But still, I don't encourage people to follow my trades or do all of that. Yes, I did hit the Facebook puts last week, the Snapchat calls, as well as Ford puts. So we had three nice, very nice winning trades last week. And I do expect SoFi to do the same thing because it runs along the same logic as those other trades. But still, do not copy my trades because I'm not a financial advisor, and this is not guaranteed money like buying the shares of SoFi is eventually guaranteed money. Now, the thesis around this trade is simple. SoFi is priced for its worst case scenario. So unless SoFi comes out and says, hey, we're having liquidity issues, we are facing bankruptcy, which we know is not the case, then that's really the only way I think SoFi drops from here, or drops in a substantial way. I don't expect SoFi to fall because they're already priced for that worst case scenario. Much the same way as Snapchat, down over 20% heading into their earnings, and then they popped 60% on Friday. Why? Because they were priced for their worst case scenario. If you pull this out to the daily candlestick chart, you could see this looks pretty much like SoFi, but on a longer version. The stock was way up, it's come way down, and then you have earnings at the bottom. So why would the stock not rally off of those earnings? Which Snapchat earnings were good, but also same thing for Amazon. Amazon's earnings were not nearly as great. The first quarter ever, they posted less than double-digit growth rates. So not good. They did not guide good either, but the stock still rallied 14% because they were priced for their worst case scenario. And as you guys can see, Amazon was way down in the dirt at about $2,700. So that's the main thesis. It's just priced for its worst case scenario. And I do think SoFi could actually see a big rally to, $15, $16, $17, $18 per share is definitely not off the table in my personal opinion. So that's the case. That's the scoop on my positions. That's my long position as well as my option trade on SoFi. Now, just to get into a little bit of quick technical analysis, if we're looking at the Bollinger Bands, this is two standard deviations away from the 20-day simple moving average. these green lines, and then that blue line is the 20-day simple moving average. We've seen a lot of resistance around this 20-day simple moving average ever since we broke under this. That was November 17th. Now, if we do see a pop above this, and that is sitting at $12.92, then we should be able to rally, even considering the fact that our 50-day moving average is at $14.53 per share. If we can break out above $14.53, we could rally straight to about $18 per share in between the 100-day and the 200-day moving averages for SoFi. So it's looking good in that aspect if we can break out past the 20-day simple moving average. If we do pull up the MACD, you can see the MACD is flirting between bearish and bullish, bearish and bullish. I can't even tell what it is right now. It's pretty much neutral. And just so you guys know, the MACD is bullish when this yellow line is above this blue line. The CCC line is the yellow line. The signal line is the blue line. And we're pretty much neutral right now. It's trying to pick a direction of where we are going to go. So that is the scoop as far as the technicals are concerned. We're still obviously very oversold, and we're looking to get back to that $14 or $15 price range that was our previous support. Expect a little bit of resistance, but the fact that institutional investors are buying the stock is very much a good sign to me, and we have seen this increased volume as well because institutional investors have been buying a lot of SoFi. And I think people that are selling are just going to be the ones that buy back in. Honestly, you know, people don't line up for sales, but they freak out once the sales come. It's the exact opposite of what should happen. Buy low, sell high. People buy high and sell low. Don't be that guy. Now, as far as the order flows for institutional investors, over the past week, 89% of these orders were positive. 88 orders totaling $40.72 million. So that is looking incredibly bullish, and that is nonetheless a very good sign. You're seeing a lot of orders for calls and puts around July 15th and March 18th as well, and these were all the trades on Friday. Some pretty large trades as well for the put side of this, and I do think they're just trying to artificially short the stock for a small gain. I don't really think they expect the stock to crater much further. Why is that? Because the institutions are doing nothing but loading up on SoFi stock. A 1900% increase to this position right here. Total Clarity Wealth Management, increasing their position by almost 2,000%. That's ridiculous. Another firm increasing their position by 47%, 22%, 110%. And then all of these green bars are brand new positions. Hundreds of thousands of shares right here. 140,000 shares, 101,000, 12,000 shares right there. And we actually do have one firm that sold 38% of their position, but they have a very small position of only 15,000 shares. Another firm that increased their position by 53%. So pretty much all of these filings are incredibly bullish. Here's another firm that increased their position 383%. And you guys can see all of the green here comparatively to the red of firms selling out. So looking incredibly good in that aspect. Take a look. Schwab is loading the boat as well. 1.5 million shares right here, 500,000 shares right here, and another 300,000 shares right there, another 100,000 shares, another Schwab 500,000 shares purchased right there. I think it's pretty clear to see that institutions are very bullish on SoFi. Now we have institutional long shares sitting at 78.05% of the outstanding float. So it looks like the flow on SoFi is pretty much eaten up by institutional investors and people like you and me that are buying and holding the stock for the long term. I also do like to go over the short interest with you guys to keep you guys up to date on what that is looking like, because it can make big moves even bigger because shorts will be forced to cover. This is not a short squeeze trade. You're not bagging on a short squeeze, but it can amplify an already large move to the upside when that does happen. So you're looking at 17.75% short interest of free float, 110 million shares that are sold short, cost to borrow max of 2.32%, share utilization of 58%, days to cover of 2.55 or 2.45. So that's looking good right there. Days to cover, short interest, very high. Cost to borrow max, if it does go up, that puts more pressure on the shorts, but overall it's not too crazy high right now. And share utilization does tell you that there is a lot of shares that can still be sold short, probably about 80 million more shares. So keep that in mind. That is the data as far as the shorts are concerned. Now, what I wanted to talk about as well is this. This is making all the headlines. If you look up SoFi news, and I'm sure people are looking up SoFi in general, if they're going to the Super Bowl or they want to watch the Super Bowl, or people just don't understand what SoFi is. I've seen a couple articles about that. But essentially, there's all of these news reports of the fan bailed out of jail after arrest in SoFi Stadium incident that left 49ers fan in a coma. So not good. Somebody was obviously hurt, so that part's not good. But it does bring a lot of publicity to SoFi. And if you guys have seen Wolf of Wall Street or you've heard this before, all publicity is good publicity, no matter if it's good or bad for SoFi or anything else. So, I mean, looking good as far as that is concerned. That's bad to say because this incident was not good, but it's bringing attention to SoFi, and I'm sure they've seen a spike in searches nonetheless. Actually, we'll pull that up right now. We'll pull up Google Trends and take a look at SoFi. And look up SoFi to see if we have seen a spike. I would imagine we have. Yeah, look at that. You've seen a spike ever since this and getting close to the Super Bowl now. So people are showing a lot more interest in SoFi, and I'm sure this has helped to drive some of the traffic to SoFi, and it's likely help their business as that is a lot of free advertisement. So that is going to be all for this video. If you guys found education, value, or entertainment out of this video, hit that like button for me, subscribe to the channel, and make sure to comment down below how many shares of SoFi do you own. What is your 5-year price target? Thank you guys for watching, and I will see you in the next one.